Hello, I'm Prakat Rustigiwali, student ID EMV25074. I'm making this video presentation in link to my individual assignment of corporate accounting. The assessment title is Issue in Statement of Cash Flow and the assessment type is Individual Assignment. The main purpose of this assessment is to develop a clear understanding about the statement of cash flow, financial statement and income statement. Here, we are asked to compare the financial statement and statement of cash flow of three major firms, BHP Limited, Santosh Limited and Fantastic Limited in the year 2019, 2018 and 2017. There are three sections, Part A, Part B and question number 2 and 3, and I have clearly explained and calculated it in my individual assignment. And here I'm going to make a brief explanation about what I have done in my individual assignment. So, moving towards Part A, it focuses on Statement of cash flow and income statement. Cash flow statement. Cash flow statement is an important tool to measure the firm's financial ability to identify which firm has the strongest cash flow and which firm has a weak cash flow. Cash flow statement also helps investors to identify how much cash in hand is left during the certain transaction time. Income statement focuses on revenue and expenditure. Similarly, Part B focuses on the annual financial reports of BHP Limited, Santosh Limited and Fantastic Limited for the year 2019, 2018 and 2017. And here we are consolidating the cash flow statement for each company across the 3 years. We are answering some questions as I've clearly illustrated and explained in my individual assignment. I'm going to give a brief explanation here. In question number A, we are basically focusing on the major source of cash for each firms and the major uses of cash for each firms. So, by all the research, I found that the major source of cash for each firm are common equity, line of credit, debt, and preferred equity. Likewise, the major uses of cash for each of those three firms are working capital, fixed asset, and transactional fees. Similarly, question number B focuses on what was the trend in cash flow for operation of each firm. Like, to find out the trend of cash flow for each firms, I've clearly illustrated in my individual assignment. So for Fantastic Limited in year 2019 it was 8030, in year 2018 it was 10182, in year 2017 it was 2750. For BHP Limited the cash flow were 17,397, 2018 17,561 and in 2017 15,876. Likewise for Santosh Limited in year 2019 2046, in 2018 1578 and in 2017 1248. So by examining all this cash flow, the conclusion was cash flow for Fantastic Limited increased in 2018 by 7432 and in year 2019 it decreased by 2152. Similarly, the cash flow for BHP Limited increased in 2018 by 1685 and in year 2019 by 164. And cash flow for Santosh Limited increased consistency in year 2018 by 330 and in year 2019 by 468. Question number C focus on compare and contrast the cash flow from operation with the net profit after tax and income statement and explain in details the major reason for the difference between these two figures. So here we are basically focusing on cash flow statement for BHP Limited in year 2019, 2018 and 2017. I have illustrated it with a table diagram in my individual assignment focusing on net profit after tax and net cash flow. So from the table I got a conclusion that the cash flow from operation is greater than the net income after tax in income statement because there were more cash received from trade receivable, the inventories were converted into cash, profits were gained from dividend and interest received on sales of investment. So question number D is, was the firm able to generate enough cash flow from operation to pay for all of its capital expenditure? So in my individual assignment, I have focused on three basic formulas to calculate this. Capital expenditure equals to net income increase in PP&E plus depreciation expenses. Second one, net increase in PP&E at the end of the year minus PPE at the beginning of the year. That is, depreciation expenses equals to accumulated depreciation at the end of the year minus accumulated depreciation in the beginning of the year. Here PP&E stands for plant, property and equipment. So based on these formulas, I have calculated the capital expenditure for three firms, Fantastic, Santosh and BHP Limited. So focusing on Fantastic Limited, I have grabbed the conclusion that in year 2019, the expenditure was 152, in year 2018 it was 426 and in year 2017 it was 1528. So from that calculation, the firm was able to generate enough cash flow from operation in all the respective year. Focusing on BHP Limited, from the calculation I have clearly illustrated in my individual assignment, in year 2019 it was 7928, in year 2018 it was 6635 and in year 2017 it was 5426. So the firm was able to pay for all 3 years. And finally, for Santosh Limited, from the calculation I have illustrated, in year 2019 it is 1013, in year 2018 it is minus 795, and in year 2017 it's 714. So the firm was able to pay in year 2019 and 2017, but was not able to pay in year 2018. So question number E. Question number E focus on, did the cash flow from operation cover the dividend payment made by the firm, if any? So here, for Fantastic Limited, I have found that no dividend was paid for all the 3 years. The calculations are clearly illustrated in my individual assignment. For BHP Limited, it was able to pay in all the 3 years, and for Santosh Limited, the dividend was able to pay in all the 3 years, yet no dividend was paid in year 2017. So only in year 2019 and 2018 the dividend was been paid. Question number F. Focus on, if the firm has generated excess from operation, if yes, how did the firm invest the excess cash? If not, what were the sources of the cash firm used to pay capital expenditure or dividend? So focusing on Fantastic Limited, no excess cash was generated and no investment was made, but the firm used other sources to pay the capital expenses. For BHP Limited, yes, the firm generated excess cash and invested on equity, accounted investment and other investment. And for Santosh Limited, yes, the firm had excess cash and acquired a subsidiary and other investing activities. Question number Z focus on, did the firm use the working capital, current assets and current liabilities accounts other than cash and cash equivalent as a source of cash or uses of cash? So here we are only focusing on BHP Limited cash flow statement. So focusing on that in year 2019, 18 and 17, so we got a conclusion that only in year 2019, BHP Limited can use working capital account as a source of cash, but it did not work for year 2018 and 2017. Clearly mention it in my individual assignment. In question number H, what other major items affected cash flow for each firm? So focusing on the major items affecting the cash flow for BHP, Santosh and Fantastic, moving to Fantastic Limited, the major factors were borrowing, repayment of commercial bills and cost of issuing shares. For BHP, the major factors were payment of tax, payment of interest, repayment of interest-bearing liabilities. And for Santosh, it was the major factors were payment of tax, drawdown and repayment of borrowing. Question number I, focus on the trend in capital expenditure for each firm. So as I've calculated and shown in question number D, the details I've grabbed are from question number D. For year 2019, 18 and 17, for Fantastic Limited, the trend of capital expenditure is decreasing from year 2017 to 2019. For BHP, the trend of capital tends to increase from year 2017 to 2019. And for Santosh Limited, the trend of capital expenditure is increasing from year 2017 to 2019 and decreasing in year 2019. Question number J focuses on, what was the trend in dividend, if any, for each firm? So for Fantastic Limited, no dividends were paid. For BHP, there has been increase in dividend paid in all 3 years. And for Santosh, there has been increase in dividend paid in year 2018 and 2019, and no any dividends were found to be paid in year 2017. Focusing on question number K, what was the trend in net borrowing for each firm? So the trend in net borrowing explained here. For Fantastic Limited, in year 2019, Fantastic Limited paid 5.36 as a repayment of commercial bill, but it did not make any payment in year 2018 and 2017. For BHP Limited, BHP made the payment of debt related instruments, that is 160, 218 and 36 in year 2019, 18 and 17 respectively. It saw increase from 2017 to 2018 and decrease in 2019. For Santosh, the repayment of borrowing for Santosh is 1474 in year 2019, 220 and in year 2018, 2442. It shows in year 2018, repayment of borrowing is decreasing compared to 2017 and increasing in 2019. In question number L, what was the trend in working capital account? We are basically focusing on BHP Limited here. The trend in working capital for BHP Limited as calculated in question number G is the capital expenditure trend is only found to be increasing in year 2019, which is in negative 118 in and it's negative in 2018 to 2017 also a negative 241. So here ends the part B question. Moving towards question number 2. Here, we have been asked to critically evaluate the financial strength of each firm for 3 companies based on the evidence presented in Statement of Cash Flow in question number 1. So, focusing on the financial strength of each firm, for Fantastic, the financial strength of Fantastic is weak since its working capital is negative and it creates a lot of debt, and the firm reduced its expenses and purchase as well, and no any dividends were paid in Fantastic Limited. For BHP, the firm has less obligations to pay. The firm has been found to be investing more on capital assets and it has not been having shortage of money. The working capital is also found to be strong. For Santosh, it managed the cash flow well and it maintained the assets and less borrowing from external source. Moving to question number 3, it focuses on if you are asked to evaluate 3 companies for lending purpose, which of the 3 companies would you select for a lending purpose? So if I was asked to evaluate these 3 companies for a lending purpose, I would go to BHP Limited, as the trend of capital expenditure has been increasing in all 3 years respectively. The firm has increased in its net borrowing in year 2017